Friends, I am going to give an illustration of one of the financial, very important financial statement, profit and loss statement. How to make profits and loss statement. Here we are given a balance sheet of a trader on 31st March 2011 below. Balance sheet shows liabilities. In liabilities column, it has been given that capital is 60,000, profit and loss account 25,000, 10% loan 35,000, trade payables 10,000. So total liabilities is 1,30,000. And in assets column, we have property, plant and equipment 65,000, stock 30,000, trade receivables 20,000, deferred expenditure 10,000, bank 5,000, and total asset is rupees 1,30,000. Additional information given is A. The remaining life of property, plant and equipment is 5 years. The pattern use of the asset is even. The net realizable value of property, plant and equipment on 31st March 2011 was 12 was rupees 60,000. The traders purchases and sales in 2011-12 amounted to rupees 4 lakh and 4.5 lakh respectively. C. The cost and net realizable value of a stock on 31st March 2012 were rupees 32,000 and rupees 40,000 respectively. Expenses including interest on 10% loan of rupees 35,000 for the year amounted to rupees 14,900. E. Deferred expenditure is amortized equally over 4 years. F. Trade receivables on 31st March 2012 is rupees 25,000, of which rupees 20,000 is doubtful. Collection of another rupees 40,000 depends on successful reinstallation of certain product supplied to the customer. G. Closing trade payable is rupees 12,000, which is likely to be settled at 5% discount. H. Cash balance on 31st March 2012 is rupees 37,100. There is an early repayment penalty for the loan, rupees 2,500. You are required to prepare profit and loss accounts and balance sheets of the trader in both cases. 1. Assuming going concern. 2. Not assuming going concern. Going before writing down the solution, a little bit I will explain for your understanding about going concern. A going concern is an accounting term for a business that is assumed will meet its financial obligations when they become due. It functions without the threat of liquidation for the foreseeable future, which is usually regarded as at least the next 12 months or the specified accounting period, the longer of the two. The presumption of going concern for the business implies the basic declaration of intention to keep operating its activity at least for the next year, which is a basic assumption for preparing financial statements that comprehend the conceptual framework of the IFRS. inter- international financial resolution statement. Hence, a declaration of going concern means that the business has neither the intention nor the need to liquidate or to materially curtail the scale of its operation. Solution: Profit and loss account for the year ended 31st March 2012. We have made this, I will explain this table how this has been made. We have case, we have column, first three columns are for expenses. How will we make profit and loss? We have to deduct income expense from income. So we have to write expenditures of expenses and income, and we will subtract income from expenses. The first three columns are for expenses and last three columns are for income. So I will explain all the term of the how this profit and loss account has been made. First, we have written here to opening a stock rupees 30,000. For going concern, it is also rupees 30,000. For non-going concern case, it is also rupees 30,000. How, from where it has been taken? It has been taken from balance sheet. I have written balance sheet in the first part of video. Balance sheet from assets column, from profit and loss account, assets column. I have taken this balance sheet, and rupees 30,000 it is shown in stock. Please see that. Buys, and another expense column, purchases, is rupees 4 lakh. So this is taken from the note 1 of additional requirement. You can see this 4 lakh has come from 4 lakh has come from point B of additional requirement. In both, it is 4 lakh in both going concern and not going concern. To expenses, in expense column rupees 14,900, it has been taken from additional information point number. This rupees 14,900 has been taken from point number D of additional requirement. This amount is both in going concern case and non-going concern. And the next part of in expense column is depreciation. It is rupees 13,000. It has been divided by rupees 65,000 by 5 since, and it has been explained due to additional information in part A. We have, and in 65,000 by 5 is rupees 13,000. So depreciation for 5 years, 65,000, so 13,000 is for 1 year it is 13,000. and in non-going concern it is 5,000. So 65,000 minus 60,000 is 5,000. It has been given in balance sheet. To deferred expenditure, in going concern it is rupees 2,500. This has been got by dividing 10,000 by 4. You can refer it to additional requirement E. And to loan penalty, in going concern nil, in not going concern case, it has been taken from additional requirement I. And so, now I will explain the income part. In first part, by sales rupees 4 lakh in both 4,50,000 both going concern and non-going concern. It has been taken from B, point B of additional requirement. And in the income column by closing stock, in going concern it is 32,000 and not going concern it is rupees 40,000. You can get it from additional information in point C. And another information is in income column by trade payables. For going concern it is nil, and for non-going concern it is rupees 600. How it will gone? You can see in additional requirement part G, 12,000 multiplied by 5%, that is 0.05. So now we will subtract income of rupees total of expense column from income of rupees 4,50,000. I have subtracted 4 lakh the expense columns of from 4,50,000. So 4,50,000 minus 30,000 minus 30,000 minus 4 lakhs minus 14,900 minus 13,000 minus 2,000 minus 2,500. This gives profit of rupees 19,600. Similarly, in not going concern, 4,50,000 minus 30,000 minus 4 lakh minus 14,900 minus 5,000 minus 6,000 minus 10,000 minus 2,500 is equal to 22,200. Both in going concern is rupees 4,82,000, and also in income column for going concern it is rupees 4,82,000. And in non-going concern, in expense column, the total is 4,90,600, and in income column it is also rupees 4,90,600. How it has come in expense from 4,82,000? The expense plus profit is 4. How do we tally expense and income? That is, expense plus profit should be equal to income, total of income.